To stay profitable as a forex or crypto trader, the most important thing is actually risk management. And when it comes to risk management, one of the most important things that you actually need to manage your risk properly is stop loss. But then when it comes to setting up stop loss, it can be really complicated when you don't know the right place to actually place your stop loss or what exactly stop loss is. So in today's video, I'm going to share with you a step-by-step guide on every single thing you need to understand on the technique behind placing a stop loss in a safe zone. Because I've seen so many people, they say they place stop loss in their trade bets, but then it's either they lose a lot when the market comes into their loss zone, or immediately the market comes to their loss zone, they lose instantly. So to help you avoid all of that, in today's video, I'm going to share with you a more of a perfect position. So there's no perfect position in placing stop loss, but then there could be something close to perfect on where you can place your stop loss to make sure that you are not losing too much per trade. And then secondly, you are actually not going to get caught out when the market reverses back to your entry position, and that is the biggest mistake a lot of people often find themselves. So that's what I'm going to help you solve in this video. So hello guys, welcome to today's video and welcome to my channel. On this channel, I mainly focus on how you and I can actually make money from crypto, forex, and stock market. So if you think you like more content like this and you need more great content from this industry, then don't forget to smash on that subscribe button, like this video as I share with you every single thing you need to know to actually make money from this industry. So without taking much of your time, let's get straight on my computer. Let me show you a practical guide on a perfect place to actually place stop loss when you are trading, to make sure that you always get the best out of it by either losing less or actually making sure that when the market comes back for a retest, it doesn't get you out immediately. So let's get straight on my computer. So hello guys, as I already said, I'll be sharing with you how you can actually pick a good stop loss position whilst trading. But before we actually get into me showing the illustration on how to pick a good stop loss position, first of all, let me show you what the benefit of actually picking a good stop loss position. So now here's a trade I took on a GBP JPY. So if you follow my live streaming earlier on, you know that I actually dropped this signal on my live stream. So in case you don't watch my live stream, I advise to turn on notification on my channel so that whenever I'm live streaming, you actually get it. So I live stream any day from Monday to Friday. Anytime I see a good opportunity, I make sure I live stream it. So now, that aside, now here is the benefit of placing a good stop loss. So here now, I jump into this market earlier on when the market was within this range here. So the market was at here. So the market was here when I actually got into the market. So this is where it was. So when I came into the chart, I made the chart around this area here. So now one thing I did is that first of all, I tried considering the market movement, and I realized that the market was actually a downtrend that is now in a ranging zone. So since the market was ranging, it would have been a bad idea for me to place an order in this area. So I patiently waited for the market to actually retrace here. So now let me just play it over to the point of retracement first. Okay, so after this point of retracement and this rejection candle here, the next candle actually triggered my entry in the market. So the candle before this particular one triggered my entry in the market. So I entered here. So now whilst entering the market here are the key things that you need to note here. Here is my key resistance area in the market, which is this one at the top here. And this below here was my key support area. So now whilst placing the trade, now here's the big mistake a lot of traders make when they are placing order. So since they place their order some pips above the support area, they will put their stop loss position directly at the support area here like this. They'll keep their stop loss position here. Now the mistake with keeping your stop loss position here is that even though the market is a bit away from the support area, it's always advisable for your stop loss position to be below the key level in the market. The reason is that key levels are areas whereby market can break to create false out, or the market can actually retest to create a chart pattern before moving upward. That's why it's always advisable that when you are trading, your stop loss position should be in there. So now let's assume I had kept my stop loss position where the market is right now. Let's see the next candlestick and see what it does. Okay, let's see what it does. You see, boom. You see that this fake candle that came out here right now would have gotten you out of the market, meaning you would have lost the profit. But then when you keep your stop loss position some pips below the main area, the main key level, you still have hopes in the market because you know that there's still an opportunity for this market to trade back into your zone again. So now most of you will say keeping your stop loss position below here simply means you are risking more. So now let me tell you one idea of putting stop loss position. Once you are putting your stop loss position, it doesn't matter the size of the stop loss. The thing is that if you are using a big stop loss position, considering where the market position is, it's not advisable to trade. So for example, if I had placed an order when the market was at this mid level here, if I had placed an order here before now, there's no good place I'm going to put my stop loss, because there's nothing that will actually influence me to place an order at this point, and then maybe I'll enter the market here and then keep my stop loss way below here. Where am I going to put my take profit? There's no good place. That's why I always advise that when you are trading, wait for the market to always pull back to key levels. Like for example, here was the support area that created double bottom previously and then moved back to the resistance area. So with this idea, I knew that no matter how this market move, there's still a 70% chance that the market will still come back to the support area. So I had to wait patiently for the market to get to the support area, and eventually the market got to the support area, and then I wait for it to bounce off before I place my trade. So immediately it bounced off with some bearish weak rejection. I knew that okay, it was time for me to actually place an order. So I placed my order here, and then with the sense that the market is still likely to come and retest the key area again, because it hasn't created any chart pattern, because market often create chart patterns. Because the reason why markets create chart patterns over and over again is because every human being trading out there are a group of people who trade the same sentiment, and then there are a group of people who also have different ideas. So when all of these ideas always mix up in the market, at least all of them always come to meet at least 3 to 5 times each day during the trading session. That's why if you look at your chart carefully, you can see some pattern repeatedly, either in a tiny moves or in a bigger move. This is because we all humans, we trade with the same set of emotions. So the mistake we do today, we do them tomorrow. And when it's either I make that mistake today or someone else does it tomorrow. So that one keep reversing or repeating a chart pattern. So when you are trading, always put this in mind. When you are trading at a key level, know that key levels are areas whereby market often print their chart patterns. So you need to always watch out for it when keeping your stop loss. So for my own case now, I made sure that I kept my stop loss some pips below the key level. So here was the key level and here was my stop loss. Still, I was still able to get a good 1:2.49, because here is a take profit at the top here, which is at the exact resistance area here, which I believe the market might get into. However, I had two thoughts. It's either I wait for the market to get to the key resistance area, I get out, or if the market gets over here also, which is a good 1:9.7, I would have also gotten out of the market. So what I necessarily did is that I just set it up like this, kept my stop loss position in a good zone, because I wasn't considering the take profit position. Because when you are placing an order, the most important thing is getting a clear stop loss position. So until I get a good stop loss position, I actually don't get into the market. So for this particular market now, I was able to get a good stop loss position because this area was a key support area over here. So since it was a key support area, I knew that okay, if there's anything at all, the market will come and retest the support area and might break below it to create fake out, and this fake out will actually get a lot of beginners who are trading the breakout market. A lot of beginners who don't have idea on trading breakout market might actually fall for that trap. So these things often happen in the market. So I had that one in mind. So however, the purpose of having it in mind, I keep my stop loss here, is that in case the market should break out of here, I knew that it has actually broken the structure majorly. Because here is a structure, it's a ranging market, meaning if it had broken out of here before, it has broken the ranging structure massively. So the next return might actually be a sell market. Then I will be looking for an opportunity to sell. So with that already in mind, I know that okay, it's advisable for me to keep my stop loss a bit away from the present support area. So I kept my stop loss at this area here. So now let's play what actually happens here. You see what the market is doing. So now you can see that from here now, the market literally came in here, got to this point, which broke this previous support area. Now you can see that it has broken this support area as a form of fake out. And at this point now, I know there are some beginners who see that okay, the market has broken out of the resistance area, so let's buy. So this way a lot of those beginners actually get liquidated, because they think once the market breaks out of support area, it's a changed direction against them. But the truth is that it hasn't changed direction against you. This is simply how market move, and all of these moves actually sum up to the benefit you get from the market when you are able to understand the chart patterns perfectly. So nothing is perfect in trading though. So now once you have it like this, now let's take a look at what the market did. Now the market will still come back down here again, because the thing I had in mind was that after this market did this breakdown, so I was expecting a structure like this one over here to be formed again, and you can see exactly that the market did. It came to form it and then it shoot back upward again. So now you see the importance of keeping your stop loss in a good position. If I had had my stop loss here before now, when the market came, what would the market do? The market would have gotten me out immediately. And most people who keep their stop loss in this sort of position are the same people that will be placing a buy order the moment the market actually break out of here. I know you've made that mistake before. Even me too, I did when I started trading at first. So it's normal. because when we get into it and then we realize that the market take our stop loss out and then came back into that area where our stop loss was again, we are fond of trading to that particular direction, but that is a big trading mistake that you need to avoid. So now the thing about this particular video you are watching is that when trading, your stop loss position should be at the previous key level, and then make sure that it has a very good position whereby even if the market should boil down, you are not going to get out of the market immediately, but then you still have an opportunity to also make a good profit. So for example, this I'm saying doesn't mean that you should keep your stop loss position here. If you do this, you are totally wasting your money. There's no need to keep your stop loss position way deep over here. The main thing is that identify a key level in the market and then make sure that your stop loss is a bit below it. Like for example, here's my key level and then I kept my stop loss here, and if you take a look at the size of my stop loss, it's more like the structure between this area here. Like if you look at this area here and the size of my stop loss from the key level, let me mark out the area here for you. You see, more like this area you see here. So it's also equal my stop loss. You can see the high and the low, and then if you look at here, the high and the low, and then the market actually created the same structure again. This doesn't mean you should always use past structure to actually identify. What I'm trying to tell you is that when placing your stop loss position, mark your key level in the market and then give it some pips away. Always keep in your mind that okay, pullbacks are always happening in the market. Like there's always a retracement in the trading market. Like market will always pull back to your support area, to your resistance area, and when it pulls back, we have what we call the fake breakout, which might occur. So now in your mind, they say okay, what if this market actually pulls back? What would be my gain in this market? When it pull back, do I want to get out immediately at the pullback, or I would like to give some room to my stop loss? That is the importance of actually giving your stop loss this decent room. So from here now, you can see that the market never came in here again. So now let's see how it moves. You see, it keeps coming to retest the support area until it went into the area here. So you see, this is simply the importance of keeping a good stop loss position. So if I had placed my stop loss position very tight before, I would have gotten out of the market and I would lose all of this profit. So just imagine the profit I would have lost in this market if I didn't use my brain and I keep my stop loss in a very good position. So when you are trading, in general, is that before you place any order, mark your key levels. If you see that your entry position is very far from your key level, avoid that market. So a good idea for a stop loss position is simply like let there be like 5 pips from your entry position. So for me, one thing I do whenever I'm entering the market is I have this rule of let me double click it, and then you see I have this rule of always using at least 25 pips, 20 pips, 25 pips stop loss position. The reason why I use all of this rule in my trading is that I always know that pullbacks are very necessary in the market. So whenever these pullbacks come, I make sure that they don't get me out of the market, and this one totally depends on the kind of pair you are trading. So for me, I've traded GBP JPY for a very long period of time, so I know that it has all these crazy pullbacks like GBP JPY, NZD pairs. Those pairs actually have some crazy pullbacks that even you yourself you don't understand, so there's no need to try understanding it. So when those pullbacks happen, you need to be very careful when you're placing orders in the market. You need to make sure that whenever there's a pullback, it shouldn't get you out of the market immediately. So now in this area now, what I will actually do in case this market has gotten me out. So for example, let's say the market actually came straight and I hit my stop loss position here. So if it had hit my stop loss position here before, what I'll do now is that I'll be waiting for this market to pull from this stop loss position back here, show me a rejection down to this side again before I'm actually going to place a sell order, because I always deal with the market structure. Like for me, I will not say I'm a price action trader, I'm a smart money concept trader or something. I will not say I'm a kangaroo tail trader. I will not call myself any particular pattern trader. What I simply trade is that I look at how the market is behaving and trade according to the market behavior. So this trade I entered here is as a result of what has happened here before, because you can see it happened here. Let me minimize this circle so you can see it happened here at the support level. It happened at the resistance level here also. You see, so me, I always look at how the market is behaving before placing my order. So I always use this market behaviors to trade the market. And if you look at it carefully, this same thing that happened here, you can see it's creating itself here again. So now this one thing with all of this trading thing is simply trading. That's why I always advise that when you are trading, like try to focus on a particular pattern, master that pattern, see how that pattern behaves, and then trade it accordingly to its behavior. So you don't have to say, okay, I'm looking for this particular strategy to enter my market, I'm looking for this particular entry trigger to be hit before I enter my market. No, simply have it in mind that
you are trading this particular market, and then you'll be using its current movement to actually decide when to trade it, how to trade it, and all of that. So this is simply the idea I have for you about your stop loss position. When trading, always make sure that you give your market a clear stop loss position, and then give room to your stop loss position to always make sure that whenever the market retraces back, you always have an opportunity to make back your profit again. Because like the forex market is always a market of retracement that creates new key levels, and for those new key levels and structures to be created, it will have to trace back before. So for example, now people who trade double bottom, now for example, let me say I trade double bottom, I'll be looking for an opportunity to enter from here. So people who trade double bottom will be praying for this structure that you see that I actually use at my stop loss notice. So when trading in general, simply mark your stop loss position and then put some pips below it. So in ideal sense, let me say if you are using 10 pips as your stop loss before, one thing I advise is that extend it to 15 pips. If you notice that the 10 pips keep getting you at, extend it to 15 pips. And then one best practice is that make sure that always trade from key levels, don't trade from random levels. Whether you are trading from 1 minute chart, 3 minute chart, 5 minute chart, 15 minute, 30 minute, 45 minute, 1 hour, or any time frame you are using, always make sure that you are trading from a key level. If it's an uptrend, your swing lows and swing highs are your key level. If it's a downtrend, your swing lows are your key levels. Always make sure that you mark those areas in the market and use them as your stop loss position. So from your entry point to that area, if it's 10 pips, that should have been your stop loss. Add additional 5 pips to it. If you think that additional 5 pips will actually result you to more locks, ask yourself, do you want to get at, do you want the market to actually come back and retest that your 10 pips, get you out of the market, and then went back into your profit and you start blaming your strategy? Or you actually want to be patient, let the market roam within that 15 pips that you actually given him, and then come back into your profit zone again? So these are the questions you actually need to ask yourself whilst placing your stop loss position. So with that already said, hello guys, thanks for watching my video, and also don't forget to smash on that subscribe button. I believe this video has actually helped you come up with the idea of placing a good stop loss position. So remember what I actually said, there is no perfect position to place stop loss. Like you can use 100 pips and still be caught out. The main thing is that looking out for something that works for you. So if you think the 10 pips you are using as stop loss doesn't work, extend it to 15 pips. If you see that the 15 pips doesn't work, ask yourself, are you actually following the trading principles of that strategy? If you see that you are not following the trading principle, we'll go back to those principles again. Don't change your strategy, provided that the strategy has won you a trade before. So there's not much to say. I believe you've actually gotten the idea of placing a stop loss position. It's simply giving room to your stop loss by adding additional more pips. So that already said, hello guys, hope you find this video helpful. Don't forget to smash that subscribe button, like this video, and tell me what you feel down in the comment section. So that already said, have a nice day. Bye.